do seem quite subdued. Revenues are flat. I mean, they're up some 2-3%. Profits are down some 28-29%. And EBITDA is also sharply lower as compared to the same period last year. Those are numbers on page. We'll have more details with our research team in just a bit. Stocks down about 4% or so. These numbers look pretty poor. Nigel, you have more?
Just one more point on page, Prashant. We are looking at the numbers and we're comparing it on a year-on-year basis. But even if you compare it on a sequential basis, the previous quarter they gave margins of 19%. So it's down by close to around 300 basis points on a sequential basis, which is a bit of a worry. And I think that's the reason why the stock is not seeing any kind of recovery. On a year-on-year basis, is looking very, very disappointing. But I'm looking at the past many quarters, and I haven't seen margins in this mid-teens, since the pandemic period. So one of the lowest margins is what we're seeing at around 15-16%. I just thought I'll put that point across, that on a year-on-year it's looking subdued, but even on a sequential basis, margins have seen a sharp decline.
No, absolutely. Thanks for that. Helpful, Nigel. We had, by the way, Page Industries was part of our sort of segment, Market Laser. This was, I'm just looking at it was on the 14th of December. It was some 47, almost 47,000 rupees back then. It's lost 10,000 rupees since. I mean, it was basically a significant technical break. And is down full 10,000 from that point on. So it's coming pretty fast. And these numbers don't help us. We've been pointing out 4%, 4.25% lower on Page Industries. Pashupati Advani is with us of Global Foray. Pashupati, good to have you with us here. Thank you very much for your time. The market's really not running away in either direction. And numbers, as Page shows, are not kind of putting the focus on Page here, but just using that as an example. This quarter has actually been pretty disappointing in terms of what it does to F524 estimates, etc. So there is no earnings support in that sense for the broader market. Would you agree?
So I would say that this is not a phenomenon unique to India. I think this is happening all over the world. Every country in the world is exhibiting some slowdown in certain sectors. And obviously, some of the contagion has to come to us, which is why we are seeing certainly the second-tier players who are giving their results now, giving subdued earnings, as you call it. And that's obviously going to translate into subdued market. And I think that's the phase that we're going through. So, at the beginning of the quarter, the heroes reported good numbers and we were exuberant, but now we're getting further into the quarter and now people are you're getting sort of indifferent results. And you're talking about Page Industries. I guess if people want to buy underwear, they're putting off their buying decisions. So that's the first sign of a recession. So that makes life interesting.
Okay, all right. Hi, Mr. Advani. Good afternoon. Nigel on this side. Well, the biggest news point that we've been focusing on for the last couple of weeks has been the Adani Group. Some of those stocks, as you would know, and we have been talking about it, they have value in the business in terms of free cash flows, their balance sheet, the core business as well, ports, the cement assets. Have you bought into any of these names?
Honestly, not yet, for the simple reason that one of the things that's happened is that a lot of people borrow against against shares generally in the market, and 3-4 of the larger Adani names are on those lists, and all the banks are pulling back. So typical of that would be obviously Adani Enterprises, which is in the Nifty, and also ACC, which is I believe a couple of the larger banks have taken it off their borrowing list, and that kind of throws people into a bit of a tizzy, because if you can't get the leverage, and of course they're getting pushed out of industry. So I think every time one of those events happens, it's going to affect the stock. I mean, you say on the way up that a stock gets liquidity when it gets added to an index, a stock gets liquidity when it's added into F&O. It looks like a lot of the Adani stocks are going to come out and do the reverse. So obviously that's showing in the prices. So it's a bit of a wait and see. Overseas, there seems to be some interest in the bonds. As you mentioned, these companies seem to be doing well in cash flow. So, there are a lot of people saying, okay, let's buy Adani Ports bonds and see, because the ports business is a proper operating business with good cash flows, and taking a shot at it, because those are trading at 10-11% yield in dollars for 2027, 2028 paper. So there are people looking in that space. Nigel?
Pashupati is saying that if people aren't buying innerwear, it's a clear sign the recession is coming. So if a recession is coming, are you foreseeing a big decline in the Indian equity market? And would you increase your cash position right now? What have you done with your portfolio in the last 2 months?
So I've actually been in cash and missed a lot of the rally on the way up. So I'm not gloating. I still don't think it's time to dive in with both feet. But I think that there is caution. I mean, I am looking at buying stocks which have high yields. I think it's really back to basics. So some of the PSUs that have high yields, I have taken nibbles on the way down. But I think that this is a time for caution. If I said to people, if you make money in equities in 2022, very few people did. 2023, I think it's going to be the same story. So yes, you will make money if you hit specific dots, and that'll be great. But in general, if you're in the market, you'll be hard pushed to make a return like you've had in say 2019, 2021, where things have actually been very good.
Okay, all right. Just one more point, Mr. Advani, Rima and Prashant. Just look at HAL's numbers, and I think they should flash for you on the screen. But the margins have seen a severe compression. It's come in, I think, a little lower than the 20% odd. We should have that up, and these numbers are looking a little bit disappointing. That's why initially, the stock was trying to find its way. But clearly, there is a miss out here because on the top line, there's a bit of a degrowth, and the margins, I think, if I've got that correct, I think it's come in sub that 20%, which compares with around 31% in the previous quarter. Even on a year-on-year basis, it's a sharp decline. It compares with around 24% also. The last 10 minutes or so, we have had a couple of margin disappointments, and Page as well as HAL, both of them, I think we should focus on the margin number out there. HAL, those numbers are looking quite disappointing. We'll try to find you the reason why, but for the time being, the stock has seen a considerable downtake from the top. Just thought I'll point that out, guys.
Hindustan Aeronautics has not reported sub 20% margins now for 5 quarters in a row. The last time its margins were sub 20% was in June, Q1 of FY22. So clearly there is a bit of a miss that you are seeing quarter on quarter and on a year-on-year basis on the margin performance. And this is a stock which has rallied so much. It's been such an outperformer in the last 1 year. Hindustan Aeronautics is up close to about 70-odd%, right?
I mean, we'll have to see if there's any one-off or anything. But Nigel, if you remember, HAL was with us in the beginning of January, and they had actually raised their margin guidance.
Yes.
The margin guidance was between 24 and 25%, and they'd said that we're raising it to between 26 and 27%.
Yes.
So this is just in January. So, I mean, they already knew how the quarter ended December went. So in that sense, this is perhaps even more jarring more than anything else. As we're saying, we'll get you more in a little later with our analysts. But HAL on your screen, 2360 or so is where Hindustan Aeronautics is at right now. Pashupati, any thoughts on names like HAL? The defense space has done very well, and for good reasons. But of course, I mean, this quarter numbers notwithstanding, what's your view?
I think one has the opportunity to make money in defense. My mantra is that we're going to be pulled towards kind of industrial, so-called new industrial revolution by the government doing spending. Now, whether it's done for defense or it's done for roads or it's done for other infrastructure, that's going to drive everything else, it looks like. So I think that certainly one should be looking at defense stocks and seeing. Plus, we are rattling sabers at China, so I don't think. It probably is a good place to come in and look at certain defense stocks. Plus, being PSUs, they tend to have higher yields, so that's another thing. So if you've got a combo of being a defense stock, being something the government needs in any kind of saber rattling with the Chinese, and paying a high dividend, those are the ones to look at. So we'll get the search engines out to do that. And now we've got ChatGPT to do it for us.
Pashupati, we'll leave it to that. Thank you very much for joining in. By the way, Zomato has now given up all its gains and is completely flat. In fact, it dipped into the red as well, but now just blinking red and green. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter.